Hello and welcome to the FinTech Finance Virtual Arena, and today we're going to be talking all about customer experience in finance, particularly when it comes to digital experiences. And joining me today is Rowan Kisby, the Strategic Director at Mullenlowe Profero. And well, can I ask, Rowan, can you give us, for our audience, a bit of background to yourself, your organisation and your role there, please?
Yeah, sure. So as you've said, I'm Rowan, and I'm Strategy Director over at Mullenlowe Profero, which is a global CX or customer experience agency. Now, we are part of the broader Mullenlowe and RPG groups. So we bring together quite an interesting mix of skills. We've got a strong digital and experience heritage, but we also bring in that creative and brand side as well. And our focus is not just on building digital experiences, but rather on building brands through building those digital experiences, so that everything you do across all your brand touch points becomes a really strong and powerful expression of your brand, whether that's your content, your platforms, or your CRM. And there's a couple of areas that we really dig into in order to do that. They all start with D because we love a bit of alliteration, but they are distinctiveness. We believe that to create an experience that's truly branded, it does need to be distinctive, it does need to be different. Disruption, gosh, we've got a point of view on that. Disconnection across the ecosystem, making sure everything's pulling together, and data activation, making sure you're actually doing something really productive and purposeful with the data that you collect and the data that you create. So that's us.
That's absolutely brilliant, and thank you so much for joining our session, because when it comes to finance, there's so many touch points that banks can pull from. So hearing all that is going to be really exciting going forward. Now, with that in mind, there's been a dramatic shift in customer expectations in banking and finance, and I understand that you've done a bit of research on that. So can you tell our audience a bit more about that, please?
Yeah, sure. So Profero recently published a report called The Importance of CX to Brand Growth, looking at consumer attitudes to that consumer experience, that digital experience across categories. And we conducted that research among 1,500 UK consumers in December of last year. So when people had had a little bit of time to get into the pandemic mindset and really start to feel out how things were changing for them. And it spans both some broad attitudes and a few pandemic specific areas, looking at how brands are adapting. So we explored everything from how brands with a poor customer experience might be losing out, and found things like nearly half of our respondents told us they would buy or spend more time with a brand that has a really strong digital experience, while on the downside, nearly a third told us that they actively avoid brands with cumbersome digital experience. And if we kind of add that up into actual cash value, that highlights the very real risk of brands losing out on a potential kind of 12 billion in sales from customers who shun them and go to those who actually are delivering an experience that's easier to navigate, that's better aligned with their needs, all of those sorts of things. So we also dug in a little to things like the tendency for brands to create lookalike experiences, what we'd call the sea of same, and a missed opportunity to differentiate there. And we took a little look into the perceived humanity of digital experiences. How close do they get to what you might expect from a brand in person? And found some interesting things about over a quarter of consumers saying that they feel there's a real lack of humanity in digital experiences, which makes them prefer that more in person, that more in human service. And that's super important and interesting for banks if we look at things like a more digitally led and a less branch-led experience going forward in future.
Yeah, I mean, that's really interesting. There's almost such a hard balance to mix, creating a digital experience that still feels personal and human. And I think when it comes to finance, that's already a very hard thing to do, especially when you're talking about people's money. It might seem slightly abstract. Now, with that in mind, when it comes to digital customer experience, I'd be interested to hear from your perspective if you think that the UK banks in particular have kept up with other tech companies or at least other industries when it comes to that core digital customer experience.
Yeah, cool. I think this is actually a really tricky one for banks, because kept up with one another is hard enough. Kept up with the broader suite of those who are setting expectations digitally is really tough, particularly when you start to look at some of the increased challenges of a complex product offering and a highly regulated environment as well. And I think really when we look at consumers, 8% of those we spoke to said the most impactful experience that they'd had online recently was from a banking and finance brand. And although that's reasonably low, it is far from the bottom of the pack, but we were still trailing the leaders when it came to adapting to particularly some of the challenges of the pandemic, which I find really fascinating, given the level of change that we've seen in consumer needs and in financial pressures over the last 12 months. And perhaps banks have been under less direct pressure to transform in sectors like retail and healthcare, where, golly, there's been a massive pivot in what they've needed to do and therefore what they've had to do. But when we look at just that short period, let alone the need to adapt to evolve over the last 5 years, the last decade, I think we've seen consumer financial needs really evolve. And I'd consider that perhaps a slightly missed opportunity for banks to really step up and see what they could do differently, particularly given I imagine some of those needs won't just be 6 months, 12 months needs. There'll be things that continue either midterm or even long term. So innovations that we build to address them now will continue to be super valuable. The other thing I find really interesting about banking and innovation within the experience is that theoretically banks are really well positioned to create experiences that are impactful, that surprise and that delight. If you talk to a lot of our clients within other categories, the thing that they want to enable those experiences is data. And banks have shed loads and such a great opportunity to request it as well. They are a safe pair of hands, or feel comparatively like a safe pair of hands when it comes to providing personal data. But I wonder if perhaps there's a tendency, because there's so much functional data there, we can make so many beautiful pie charts with the data we have, to neglect perhaps some of the more emotional jumps that other brands may have to make. They have to infer more because they don't have as much of that more functional groundwork. And if we looked at perhaps inferring more, empathizing more, would we get to slightly different places? And this is typically where at Profero we'd maybe look a little bit further beyond the category when it comes to keeping up, when it comes to finding inspiration. And there is some great inspiration in brands like, I don't know, I'd go to someone like Headspace, who are doing some really interesting stuff in kind of the financial well-being space at the moment, or Couch to 5K. I think that's probably a great example of a brand that is helping people through quite difficult and high commitment challenges, but doing so incredibly effectively. And we see some of that kind of empathetic, more human attitude emerging in some of the new challenger tools. But I think it would be fascinating if we started to see more of that emotional sphere, more emotional needs addressed in the mainstream finance space, rather than leaving it to some of these little ankle biters that are emerging around the edges.
Yeah, it's interesting to think that finance doesn't have to just encapsulate that specific part of paying, depositing, and sending on money. Now, you brought on that really important part of customer experience that I think resonates really well in finance, that is trust. To you, what are the most critical aspects of customer experience that consumers typically look for in a digital and mobile banking environment?
Yeah, that's a really good question, because I think, although broad brush, we've seen consumers tell us in this latest piece of research that they want brands to deliver more human experiences online, and that they find experiences frustrating, that don't seem to understand them or what they want to do. We also heard them tell us about the need to solve new problems. So 26% of them, not just 26, that would be a very small number, felt it was really important for brands to help them solve new problems in their lives. And for me, that's fascinating, because there have been plenty of those in the last 12 months. To dive down into a few of the specifics that we've seen, we actually did a second piece of research slightly earlier in 2020 that gives us a feel for what some of those really specific areas might be, particularly among the incoming generation of banking customers. So we looked at 18 to 25-year-olds alongside SMEs to understand how some of their needs during the pandemic were changing in a piece called Banks, Digital and a Recessionary Relationship Reset, which I can not only remember but say glorious alliteration.
I'm impressed.
Thank you. And we asked them to rank a number of features, and really interesting for me is that the same one came out top for both our SME group and our young consumers, which is tools that help me feel safe from fraud. And for SMEs, it was runaway in terms of its lead over other, perhaps more expected things like, oh, help me manage my money, or alert me when my overdraft is up. And I think perhaps we've seen quite a lot of, over lockdown, as everything's gone digital, there've been more opportunities for fraud, and I think a heightened awareness of attempts. I think there's also, again, that emotional aspect creeping in there. If I want my money to be safe, I want to feel safe, that perhaps some of the traditional tactics to address those challenges don't necessarily take into account when we're viewing it as a fully functional need. The other thing that popped up, which I think is fascinating for consumers, was subscriptions and underutilized subscriptions, and banks helping you kind of find these things you're spending on but aren't really actually getting much value from, which, as we see more and more brands offering that type of service that comes out in dribs and drabs of a $5 there, a $10 there from your account, actually that does mount up, and it's a fascinating data challenge for banks. How in the experience can you pinpoint those which might be underutilized? How do you make that really smooth and seamless rather than just another chore? But I think the best question you can ask, although it's always fascinating to put the features we think might be useful to consumers and say, which one of these, which is most interesting, which is most valuable? I think the best question you can ask is actually about the problems and the worries. And I think asking people about their financial worries is a really interesting conversation to have, because that's what tends to lead to fresh solutions. When we stop looking at tools that help me manage my money and start looking at, I'm on furlough and my income's unpredictable, or money's tight, but I still want some fun, I'm saving for a mortgage, but gosh, that's 15 years away. Do I just sit in my bedroom until then? Or I can't afford to buy the kids new school uniforms this term. Then I think those become really interesting challenges and probably lead to more interesting solutions, more talkable solutions, solutions that start to evolve your experience beyond others rather than simply just replicating it. One of the most interesting innovations I've come across during the lockdown period was Starling and their connected cards. And I think that idea, the empathy behind that sense of someone else needs to do my shopping, how do we manage the money conversation? And gosh, us Brits are terrible at money conversations anyway. I think that's a solution that comes from understanding how people live, how they actually work with money, not just riding a new financial or a new tech trend. And that's the sort of thing that I look at and go, gosh, I'm jealous of that. Gosh, that's a fantastic solution. That really does start to set that brand apart from others for me.
Yeah, I think that's really critical. In fact, it's interesting you brought that. We actually just had Jason Maud on the virtual arena the other day talking about the thought process behind that connected card. When you hear it, it really does sound like those neobanks are looking at finance that is deeper than a way, as we've brought up actually in this conversation before, than just depositing cash. This is actually people's lives, and the fact that financial services is taking so long to realize that is very strange. Now, you've kind of brought up a few points already, but do you think that some of these customer experience demands are changing through lockdown? Do you think they're becoming more grounded? They're becoming certainly more, not scary, but realistic, rather than just this frivolous kind of saving a penny a day?
Yeah, no, I think you're right. And although obviously our recent research has been looking at kind of a moment in time, we've also been doing other bits of digging. So I've just been involved with Pro in a big e-commerce report, just looking at how people anticipate their behaviours changing or changing back going forward. And I mean, if you think about it, we've got 3 lockdowns in now, when we've had to do things virtually that we might have preferred to do physically. And however long you might think it kind of takes to form a habit, that's a pretty lengthy trial period for new behaviours. And we've seen lots of stats out there in the press, the number of people who are either trying digital banking for the first time or getting more involved with the digital banking, conducting tasks more often, conducting fresh tasks virtually rather than physically. And I think that gives us more of an audience, more of a reason to innovate in this space, because we know more of our consumers are using it and are likely going to continue with many of those habits. But it also challenges us to look at, if that's your main view on our brand, if the thing that you spend most time with of us as a bank is that app on our phones, what are we telling you? What are we communicating to you about us and about what we stand for and about our relationship with you through that single point of contact. And I don't think it's just people's increased reliance on the digital tools that banks offer, or perhaps increased propensity to engage with them and confidence using them because it's no longer scary. We've all tried it now. I think we're also going to see some fresh pressures on our consumers that will be really different across different groups. And I think this is why banks can really differentiate themselves, because by looking at, well, who are our customers? Where are they in their lives? And what problems can we solve for them? There are some really different solutions, I think, that will fall out of that. So, for example, for those who are starting out, I mean, gosh, I came out of uni just early enough before 2008 to not be entirely swamped by it. But you look at the generations coming out now, and the financial mountain is bigger and harder to climb than ever. You've got house prices, you've got uni debts, you've got either you're on furlough or you've never got that job in the first place, and having to come out of that is incredibly hard. That's a huge gulf before traditional milestones are reached, or before you're even before you sight the first peak on the mountain range. And for me, there's a fascinating question there of not just how do we help them navigate those milestones, but how do we help that generation reinvent them, find their own versions, navigate that decade with joy, rather than just telling them to buy a little less coffee and put another penny in the pot. That's a long way to spend a decade.
Yeah.
But on the other side, you've got those who've kept their jobs, who've not been on holidays, and who may actually have much more disposable income to look after, but may also be starting to reevaluate how they live. And again, that traditional ladder may be starting to look a little bit different from them, and I think that's fascinating. Whereas then you've got those who've started their own thing. We've seen a massive increase in new company formations over the last 12 months. And helping them ride out what is always a crazy first year, but it's only going to be a crazier one as the economy settles itself into a new shape, hopefully, over the next 12 to 24 months. That's another fascinating challenge. So I think all of these are really interesting. And then on top of that, another angle I find fascinating is I think we've all come out of this with a bit of a fresh perspective on what matters. And we're all a little bit more aware of the importance of that little local business and the fact that it won't be there if we don't support it. We're all a bit more aware of the importance of the global community, for a very selfish reason, that we've seen the impact that changes and disruption globally can have on us. And I'll also be really fascinated to see how that changes our behaviours, how that changes how we invest, how that changes how we spend, how that changes how we give. And all of these are either big challenges or big opportunities, depending on which pair of glasses you want to look at them through. And I find the second pair a lot more exciting.
Yeah, it's interesting to kind of have that. I hate to always say positive outlook, but it is certainly, it's going to be that new normal. That's certainly going to be very exciting to stake out. And I think you brought up a generational point there, that there has been a generation post 2008 that is effectively, this is their first decade out and about. Some have just still stuck in university, but haven't even been able to leave their halls because of the pandemic. Now, without looking at the pandemic too much, I want to explore that further. I want to see, have you seen a difference in customer expectations across demographics itself?
Yeah, we have. So within the survey, we did see some distinct differences between our youngest group, our 18 to 24s, and then our older groups, like our 45 pluses. I think that's always nuance and shade, because we are all exposed to the same brands setting those expectations. The brands that kind of teach us how to use the internet in its most modern form, whether that's Amazon, whether it's Spotify, whether it's Uber, they're not brands that are confined to any one generation. But we do see differences in indexing. So younger consumers, for example, in our research, were more than twice as likely to feel that brands in general are falling behind when it comes to meeting their expectations of what a good digital experience means than our 45 plus group. And when we dive down into finance and banking, I think over a quarter of 18 to 24s think finance and banking brands are falling behind with their digital experiences. And that's in spite of kind of the popularity of challengers in the sector. So they're going to be a really interesting group to watch, and it'll be fascinating to see whether brands flex to their needs, or whether they simply demands something very, very different, and we're yet to see another wave of challengers jump up to meet a very different set of desires and expectations and behaviours.
Yeah, I mean, going back to your previous answer, do you think that generation that, for instance, as you mentioned, has really quite suffered from the pandemic, that the ones that are still in university are not only tech savvy, but also very particular because they need the best services possible to get by, and maybe the older generations have not had to have that level of kind of digital savviness combined with the fact that they can get better services elsewhere? Is that something that is prevalent in finance?
I think we might find that they're working in a less predictable world, perhaps. And I think you're right in terms of that's going to require more thought from the brands that seek to support them through that. I think we're now probably seeing maybe more avenues to success, whatever success looks like. It now has many shapes, but there's also no one obvious course of action that can get you to the one obvious next milestone. And we've been going in that direction for a while anyway. I don't think having conversations about milestones for people changing is absolutely new. But I do wonder how much that's about to speed up and how much of a backlash against that typical way of thinking and planning and hoping and we might see. And that would lead to a very different way of supporting that generational group as they maybe will they look at a little bit more now? I don't know. Will they want to actually plan harder because it's harder to achieve? I don't know, but it's going to be fascinating finding out, and keeping an ear to the ground is going to be incredibly important, I think, over the next 12 to 24 months.
Yeah, well, I'm definitely going to be looking out for that because that sounds absolutely fascinating. But going back to your research a bit more, you note that banking and finance, from what I've read, are most likely actually of many industries to display copycat type digital experiences. Can you tell me a bit more about that, please?
Yeah, sure. So at Profero, one of the things we challenge is this idea of distinctiveness and creating experiences that you couldn't just strip a brand off and then they would look like every other brand in your sector. And in the research that we've done, we saw that people felt that there really is this, what we call a sea of same, that similarity in digital experience. And to be honest, it's not something that's just confined to finance and banking. There is an overwhelming lack of originality across the board in nearly every category that we looked at. But you're right in that it is particularly pronounced when we look at the finance and banking category, where I think 63% told us they felt brand experiences were the same.
Wow.
And I think the sea of same, it really points to that critical need for brands to differentiate themselves, because as I've said, it's the space you're going to be spending, for many of us, most of your time with your bank. How much time do you spend in your app managing your money, thinking about your money, versus catching a piece of advertisement? And in terms of your customers understanding your brand, then what better opportunity is there than to impact them within your existing platforms, within your existing experiences, where you already have their attention, and yet often brand sits over there in the communications bucket. And I think there's probably two kinds of innovation when it comes to the sector, and it's maybe more apparent here than in others, to be honest, because banking has been challenged so quickly to change its game. And so we've got what's probably the new hygiene stuff that's relevant to everyone and that's quickly becoming ownable by no one. For example, the ability to freeze a card, to round up your spending. We could all have pinpointed which challenger it was that introduced those, but consumers reasonably quickly, they're popping up in every account they have in their repertoire. And when we talk about consumers as repertoire shoppers will do in banking, that's an interesting way to think about it, because there's a high likelihood your consumer will be looking at your banking interface, will then be swapping over to the other one because they can't remember where that direct debit or standing order comes out from, or where that payee's details are, and then we'll be logging into a third one and reminding themselves comparatively how terrible the login experience is on that one, won't be going back there again.
Yeah, I just want to say it's interesting you brought up the freeze your card instance, because that is actually one of the financial technologies that I actively remember seeing a traditional old school bank advertising and finding it odd because I'd had that service for what felt like 2 years previous. And it really does strike me as the perfect example of that copycat method. It's really quite mind-boggling.
It really is, and it's because it answers a problem that has just been around for so long, and is so painful to people. And it's been fascinating to see it just cascade down from the challengers right through to the traditionals as they suddenly go, gosh, this is a massive issue for our consumers that they probably do face, not necessarily regularly, but regularly versus the life cycle of your typical banking consumer. But I think it also just flags up an issue with this first kind of innovation. It solves these really general needs. And as such, it's really hard to own over a long period because it's the sort of thing anyone can borrow and deploy. And gosh, it's incredibly useful. So it becomes the category norm. It might take a little while for us, but from a consumer's point of view, reasonably quickly, they're seeing that everywhere. And I think the second point to look at when you're innovating really then is there anything that is less nickable that will become ours and ours alone? And yes, that can be because only you have the data, only you have the technology to deploy, but it can also be because it's a need that's unique to your customers, or it's a solution that's really appropriate to how you position your brand. And this is why I think the brand and creativity piece of the puzzle comes in. Because if we debranded, I don't know, the 3 or 4 banks that you visit online regularly, they all offer largely the same thing. If you tried to match them up with brand purposes or with brand propositions, I think you'd be quite hard put to do it beyond a little bit of language they might look at here or there. But if you look at how banks talk about themselves, if you're a bank that is helping Britain prosper versus one that is for confidence for everyone every day, or opening up a world of opportunity, for each of those 3 things, they would support really different types of tool, really different types of experience. And there's already interesting opportunities that open up just as you think of them. And if you bring together that sense of, well, what do my consumers need? And also, if I was really to live this brand, what might I do? How might I solve that problem? What might be unique to me and therefore less borrowable, and also potentially more talkable and more brand building, creating that long-term sense of relationship and value and distinctiveness in consumers' minds. That I find really fascinating. And I think there's a role for both types of innovation. And perhaps actually it's one of the challenges that will face some of the startups in the market. And I think they've nailed the first kind. They're solving the big glaring issues that have caused a load of us pain.
Yeah.
And they're creating a lot of great frictionless assistive tools and techniques that will probably gradually be absorbed by a number of the bigger banks. So therefore, as the bar just rises.
Interesting. Now, I'd want to ask you then, do you think that maybe some of the more traditional, the larger banks have almost become a victim of their success in effect, and they can't target a particular cause or brand identity because they do service everyone? Look at HSBC. It has to go with the slogan, the world's local bank. Is that something that's going to hold them back effectively forever, and only the neobanks that can actually start enjoying a actual brand identity, for instance, Money's with the underbanked?
I think that's a really interesting question. And I don't think it's as simple as challenger banks having an advantage versus legacy banks because they tend to service a broader group of demographics, having it slightly harder. I think actually it might be one area where legacy banks, where some of the traditional banks have real opportunity because they have been able to brand build, albeit through things like their communications, over a long period of time, and they've built up distinctive assets and affinities. And my challenge for them would be actually, now's the time to take those things and to start applying them to your digital experience, to look at how you really live them in every touch point. And I think that's a real opportunity for them. And in contrast, I think for the challenger banks, for a number of them, their proposition is built around ease. And that's really easy to own when you're the challenger in your initial years. And I think they will have to evolve slightly to become more meaningful and more distinct from each other, as you see perhaps your stylings start to do. And that will be their challenge of what do we stand for when there's either a raft of challenges that make things easy, how do we differentiate ourselves there? Or as some of these more hygiene mechanics filter down into the more traditional banks, or as they start to develop their own challenger mechanics, then I think there will be a really interesting question of, we're not the only one that's about ease. What does that mean for us? What does that mean for our consumer group? How do we really build emotional meaning into that for the long term versus just for that initial period of challenging a status quo?
Interesting. So, I mean, to me, I feel like there must be quite a lot of untapped potential in the industry to come up with this unique offering. And even just from this conversation, you brought up two instances that actually kind of blew me away when it came to a different type of potential in finance. I hadn't thought of, for instance, Headspace, offering up financial services, planning. It's a meditation app. But now it's looking to move into finance, and not in a kind of depositing way, but it's opening up the kind of definition of what banking and finance is and what customer experience can do. So to rephrase my question and narrow it down, do you think that there is an untapped potential in the industry to coming up with a unique offering and gain market share? Or do you think finance is already as broad as it possibly can be?
No, I think there is. And that's a short answer, so I'll give you the longer one. I think there definitely is, and we'll see it play out in a couple of ways. First will be those challengers growing up and maturing into their brands, maturing into their audience, maturing into the service suite that best suits them and their offering. And we will probably at the same time see the incumbents start to diversify their offering slightly, start to overcome some of those same barriers around usability that plague their digital experiences, start to become again more human in how they express themselves. But I think we will then see another wave of challenger behavior where we see the new, whether it's killer features, I think they will be slightly differently shaped. So we might see very different groupings of services. As you've said, banking meets lifestyle. What happens if you smash together banking and well-being, if you smash together banking and lifestyle? We've seen a load of Gen Z brands, hate that phrase, we've seen a load of new brands in other sectors just sit back and take life a little less seriously. And that might be antithetical to a world of banking and finance. We're seeing it happening in retail, in fashion, in categories like skincare. This kind of rebellion against the staid and beautiful and perfect millennial world. What happens if that rears its head in finance as well? Do you get a bank that behaves very differently, or do we need those stamps of authority from our financial institutions? I'm not quite sure when it comes to the next incoming generation which of those two will play out. But I think the other thing that I find really fascinating is where we'll go next in terms of moving from spending to consumption and impact, because we've got so many hints of interesting fresh models developing in that space, where it's not simply a model that offers an easier experience or helps you manage your money better. It's a model that shifts sideways into helping you manage your consumption and manage your impact, whether that's brands like Tread, which was very interesting at the end of last year, or over in, I think it's the US, Aspiration Bank, brands that are associated with doing active social good and helping you spend and manage your finances in a way that acknowledge their impact on the communities around us. And that I will be very interested in as well, keeping an eye on, waiting for something to launch that I can put some cash into, because I think post-COVID we all are that bit more aware of our social responsibility, and I wouldn't be surprised if those propositions become very, very interesting for consumers once they hit the mainstream for us.
Yeah, we actually had Joe Sandberg, the co-founder of Aspiration, on the show, and hearing him talk about what his vision of the future was, not just for Aspiration, but what his company could do going forward, and the fact that it was going to take finance into different places. It was inspirational. But with that in mind, I think one thing that speaks to me is the fact that for a lot of people, finance is invisible. No one wants to think about paying for things, no one wants to think about depositing things, and no one thinks about how your spending habits are actually impacting every hobby or passion that you have. So do you think customer demand for better banking services is never actually going to catch up? Because for a lot of people, they don't think about their banking and they don't think about how a payment is actually a financial services. And as a result, do you think that customer demand for better banking services will ever catch up to the tech industries? And do you think that in this kind of boring dystopia, we're going to see the banks continue to get away with merely satisfactory products going forward?
So I think there's probably a couple of things at play here looking forward. I think there's still a way to go to catch up with other industries before consumers will see finance and banking as in parity with the other experiences that they will go through. And part of that is there's a load of complexity and a load of regulatory challenge to get around that perhaps other sectors don't have to deal with. However, I don't think that gives banks a get out of jail free card when it comes to delivering merely satisfactory products, as we've seen with the challengers who are starting to steal share, and also because you're never going to be analysed in a box. Consumers will always be looking at you through the lens of all the digital experiences I go through. Is this just a really painful one or not? And as they start to look for potential alternatives, particularly as so many options are now becoming the second or third bank in repertoire, they're going to be more and more exposed to different ways of doing things as those challenger brands grow up and continue to gain share. I think there will also be some interesting new challengers that jump in and bring some fresh propositions to market as well. But I think that the incumbents have a really interesting advantage in strong and meaningful brands that they can build on to create some really interesting, distinctive features and functionality. And maybe rather than thinking about them as distinctive features and functionality, we can think about them as really distinctive ways of getting down into their consumers' lives and really starting to bring their propositions, their promises, their purposes to life through digital tools and tactics that can support their members, their customers in the moments where they're most in need. I also think it's really easy to equate the newcomers with the guys who have the potential or who we should be afraid of. But if we look back at someone like First Direct, who's kind of the original challenger, they teach us that some of this stuff isn't just about being new, isn't just about being shiny. I mean, we talked 20 minutes or so ago about the importance of being human and humanity, and I think that's something that First Direct do incredibly well. They're still got strong in satisfaction ratings, and they do really well at just having real people in easy reach and creating that sense of humanity, of accessibility, of empathy that can really easily be lacking in even some of the most advanced tech offerings. So I guess I'd say if you're worried about what next, don't spend too long eyeballing the hygiene features that your competitors are creating. Look for the disruptive ones, the distinctive ones that are really true to you and that help you address real needs and real problems. Just find an interesting problem and see what you could do with it. And remember to keep it human, bring some of that emotion and some of that empathy back, which we all need when it comes to talking about our money.
Yeah, it's weird how money and finances, despite being at the heart of everything you do, has had its humanity removed, when in fact it should probably be the most personable of all your applications that you use. And an interesting point you bring up at the beginning there was the fact that, to me, it sounds like by creating an easier onboarding services, it has changed the whole industry by the fact that now people don't just have one bank, they have numerous, and as a result, the innovation game has begun. So Rowan, thank you so much for your time. It's been an absolute pleasure having you on the show, and also to all our viewers as well, thank you for watching. You can catch the rest of the series and much more over at www.fintechf.com and of course YouTube and LinkedIn, where I'll see you in the comments. So guys, thank you so much, and I'll see you soon. Goodbye.